Yeah, the unemployment numbers came out this morning, and I don't look at what the actual numbers are because nobody knows how to interpret them anyway.
Mhm.
All we care about is what the market does. So it was perceived that the economy isn't doing as well as everybody thought.
Mhm.
We went from, as far as interest rate raises are, we went from a 90% chance for 25 and a 10% chance of 50 to now a 50-50 chance of it being either 25 or 50 basis points.
Yeah.
Um, so what some people perceive that is that we're not doing as well as we thought. 50 might be a little panic by the Fed if they have to do it that much in one shot. So we're getting a little pullback in the markets. That's exactly what's going on right now. I always, when things like this are happening, get my shopping list ready. I don't run away from things like this. I look to buy high quality things that line up with my levels on my technicals. To me, there's no such thing as a stock market crash. There never has been. It's just a buying opportunity. We can go back the last 150 years, and anytime we've had a major event, all the market has done was gone up from there. So, not a time to run away from things. But again, it doesn't mean that you jump in with, excuse me, you jump in with both feet and you shoot all your bullets at one shot. You look for the quality companies that you like. I look for levels based on my technical analysis to start getting into those stocks. And this too shall pass. I can guarantee it. It always does.
Can we say it's good time for long-term investment, David, during this?
Again, that depends on your age. Okay. I'm an old fogey. So for me, I've gotten, I'll tell you exactly what I've done. I'm 63 years old. Right. So I have my 401ks. I have a bunch of stuff. When I was younger, in my 20s and 30s, excuse me, I was probably 90-10 as far as my stock to bond ratio, which is an extremely aggressive approach.
Mhm.
And when you're younger, and as long as you're still contributing to that, that's where you should be. Because again, over time, the market always goes up. It just does. It's done it for 150 years, like I said. So depending on your age, that's depending on how aggressive you should be. As I get closer to my retirement, although I'm going to do this until the day they put me in the grave, because I just love doing it and I love trading. And it's the only thing I know how to do. But as you get older, you adjust. So I'm down to about 60-40 right now, which is pretty conservative. I'm older. I don't want to live through a 20-30% pullback in the markets at this stage in my life. But for younger people, again, as long as you have a 401k and you keep contributing to it, you're going to be fine over the long run. That's my strong advice. For those who don't want as much market exposure, and again, I am not a financial advisor, okay? We don't tell anybody ever what to do, even trading, let alone with their money longer term. But I've gone into some things like municipal bonds. A municipal bond is backed by the government. Some of them pay 4 to 5%. You have to stay in them for a long period of time. They're triple tax free. That's one thing I look for. Annuities are always great. Annuities, you don't have the exposure to the market also. So there's a lot of different things that you can do without having a lot of exposure to the stock market. And you adjust that depending on your age.
Yeah, gotcha. Thanks for those tips, David. I would like to say hello to chat, Madeline, Razali, Quinn, Ben. Good morning, everyone. Hello. Hope everyone is doing well. So today we are wondering your entry and exit strategies and how you align with the trading psychology. David, I just remove our disclaimer if you want to pull up any chart.
Yeah, let's show them the charts. Let's that's good. Let's talk about where we are technically today in the markets, and then we'll get into that stuff. We have broken some levels, some technical levels now on the way down. And the way I look at this is I have my spider chart up. We'll go to the daily chart.
Right.
Okay. So I get a little longer overview. And here's my daily chart of the SPYs. So you can see we broke through my 65 EMA, which is a fairly big support level on a daily chart. That was about 544. So now we're at 541. Okay, here's my weekly level in the spiders. So again, we broke a big weekly level around 544. So my next level is around, I'm going to say like 530. So we got some room in these things if we decide to start going down from here. Let's check out the monthly. Again, yeah, around 530, 525. If we look at the bigger picture in this is a monthly chart of the spiders. So it goes back a few years, right?
Mm-hmm.
So if we look at the bigger picture in this, just from let's go from last year where we were. right about here, September. Okay. So from last year in September, the spiders are around 426. We're up 100 points from there. That's like 25%, right? So looking at a bigger picture, you know, even if we got down to the 520s or so, 525, that's a normal pullback to a trend line in a longer term trend. It looks ugly. It's not pretty when it's happening, okay? But this is a nice long-term chart showing me potentially where we could get to. Again, this is when you get your shopping list ready, start buying good quality companies. I can tell you the first ones I start looking at, NVIDIA is always on the top of my list, okay? So we're trading like at $101. We have a little support at like 97, and then 82.50 would be a wonderful spot. So as far as longer term investing is concerned, I'm going to my daily, weekly, and monthly levels. And when I find a monthly level, that's where I'll start to make an investment. I'll start with my smallest amount. It's something that I want to hold on to for a long period of time. And I don't get scared. It's like when you go to the store and your favorite jacket's on sale. Do you run away from the sale? No. That's when you buy it, when things are marked down 10% and 20% and 30% and 40%. Yeah, Arn, to answer your question, when you have markets like this, okay, and you have a relative strength that is that low for a long period of time, Arn, don't look for far from moving average trades. They're just not going to work, okay? Today is a good day, guys and girls, and that's why it was important to have a good start to the morning. You don't need to be involved in trading this market right now. All we're doing is going down, right? And the people who are trying to pick bottoms of this are the ones that are getting hurt. You know, the trend is your friend, okay? So if we look at the chart of the QQQs, we exactly hit our trend line at 11 o'clock. So this is where we short, this is where we short, and we've done nothing but go down since then. So if you're going to trade on days like this, you have to be what we call a trend trader. And the trend is your friend, man, until it's not. And this is just telling us that at this moment, we just want to keep going lower and lower and lower. So instead of picking spots to buy this is when you become a trend trader and you just sit back and enjoy the ride until the trend changes. So there's different ways to trade, even when the market's going straight down, when the market's going straight up. There's different ways to trade, and there's different trades to look for. But the saying on Wall Street for 150 years has been the trend is your friend. It's not going to change, right? Yeah. And this is when people get in trouble when they try to pick spots. Oh, it can't go down anymore. Yes, it can. Oh, it can't go down anymore from here. Yes, it can. And it can keep going down. And this is why we tell people that the market can go in one direction longer than you can stay solvent if you're going to be if you're not going to let things play out in that way they normally will. If you're stubborn, you're going to get yourself in a lot of trouble in the markets. So try to find a trend. Are we going to get a bounce from an oversold position here? We will at some point. It might not come till later in the day, right? But, you know, this is one of those days. I don't know how much the spiders are down now. I mean, we're down. Yeah, I mean, we're down, 150 handles from our highs. So we will get oversold. To be a little bounce. If we look down here, guys and girls, right here, when our relative strength, this is something we look for, got really low down into the 20s, we got a bounce. We're not there yet, right? So if our relative strength on this bar downs get down to it here again, that's where we can look for a little trade for a bounce. But again, trend is your friend all the time.
Is there any other indicator or method that we can identify the reversal points?
The most important thing to identify a reversal point is your relative strength. That is the most important piece. Some people use MACD. Some people use Bollinger Bands, right? The most important thing, this is telling us when stocks get overbought or oversold. That's what my relative strength is telling me. So that's the only indicator I use to try and find a little reversal trade. But for the most part, when you see this happening, just be on the same side of the trade if you can be, or don't trade. Carol, which EMAs do I use? Okay, I'll type them in for everybody.
9, 15, 21, 35.
Close. All right, we use a 9, 15, 35, and 200 exponential moving average. Exponential moving average. Yeah. Madeline, some support. And again, guys, when I'm showing you these longer-term charts, I'm not telling you to buy or sell these stocks, okay? I'm not a financial advisor. I'm pointing out support levels on my chart. That's all. That's all I'm doing. So if I go to NVIDIA,
NVIDIA is
we've broken all
crying.
our daily levels now. So my first spot is around 93. Okay. That is my 200 EMA on a daily chart. That's a fairly big level. And then I'll go to my weekly chart. And if we break 93, I have around 81. So those are the levels that I look at. Again, not telling anybody where to buy and sell stocks. I'm just going by my technicals on my chart. That's it. Those are support and resistance levels. You do with them what you may. Do you use default RSI parameters? Yes, Carol. Yes.
Is it based on 14 days or
14?
Yeah. Okay.
Yes, 14. 100%.
Thanks a lot.
Yep. Do I use a 1 minute chart? The only time I will ever use a 1 minute chart, Carol, is when something gets really overbought or really oversold, and I'll look for a reversal candle. That's the only time I will ever use a 1 minute chart. Otherwise, it's just not enough information.